Thank you. Good afternoon, ladies and gentlemen, distinguished delegates, business leaders, colleagues and friends. I'm very pleased to have been asked to open this session this afternoon on what we believe is a critical subject, not just for financing for climate action, but for the whole, across-the-board Sustainable Development Goals agenda. The NDCs, the nationally determined contributions, which I call the Paris Plan in the countries, are, as we know, the crux of the Paris Agreement and form the foundation of the pathways towards low-carbon, climate-resilient development. Problem is that while the NDCs submitted by nearly 200 parties are a significant step in the right direction, they are, in their current form, insufficiently ambitious. Secretary General was speaking this morning at a forum on policy coherence, and he was saying that on the one hand, the plans are not ambitious enough, and on the other hand, we're not even meeting those plans in their limited ambition. As detailed in the UNEP emissions gap report, even if all conditional components of the NDCs were to be implemented, global warming would only be limited below 3 or 3.5 degrees Celsius, well above the 1.5 or 2 target. While such temperature rises will impact all countries and all people, we know that the smallest islands and the poorest, most exposed regions are those that will suffer first and hardest. Clearly, our ambitions must be higher so that the temperature doesn't get warmer and our implementation gets faster so that climate change doesn't turn more dangerous than what it is today. Where then do we even begin? The answer, to be frank, lies firmly with the private sector. Such a global challenge can't simply be won by governments of the world without businesses getting strongly behind it. Current estimates peg the global renewable markets at about 300 billion a year in new businesses, which is only a small part of the trillion annual market in climate business solutions, according to the International Finance Corporation. The other markets for innovation include green buildings at about 400 billion annually, climate smart urban transport, about 300 billion, water recycling, a much smaller part, around a quarter of a century billion, and municipal waste management at 160 billion, plus the huge upside in energy storing at 2.5 billion. All of these are sectors set to grow, and much of this is going to be spent in developing countries in emerging markets. Improving and developing financial mechanisms and instruments is therefore critical as a stimulus. Ideally, countries would reach their NDC targets and investors would obtain great returns for their shareholders at the same time. Let me outline 3 key areas of innovation that we at UNDP think are important and promising for the future. First, major investments in low-carbon development technologies will be needed from the private sector. While challenging, we can accomplish the needed shift by looking to public funds for de-risking where required, addressing bottlenecks, whether regulatory or otherwise, supporting project development to mobilize private capital through feasibility and pre-feasibility, and finally providing concessional financing. This can be done through a variety of products and structures, such as de-risking facilities and lower interest rates. Not only does this help achieve the NDCs and combat climate change, but it also, in parallel and in the same go, creates jobs, spurs innovation, and helps raise people out of poverty, goals we must always have in mind. Second, low-carbon development projects could become bankable by shifting the risk-reward profile of renewable energy investment, as we have done at UNDP in several countries. Where there is undercapitalized financial sectors, local banks may be concerned about lending their limited capital to borrowers in an unproven sector such as renewable energy. Partial loan guarantees from a development bank can provide these local banks with the security they need to issue loans, whereby a portion of the risk of default is transferred to a public sector obviously interested in seeing these activities progress. And finally, we have to reverse the discussion flow. For these innovations to be successful, they must be country-led and private capital friendly. There is still a disconnect between financing and need, and a lack of awareness within the private sector of what must be done, just like there is a lack of awareness in the public sector on how to mobilize private finance, how to be private capital friendly. And we, as investors, donors, and implementers, want to avoid prescribing this top-down. We must have a decentralized strategy of opportunity offer by some and risk investment appetite by the others, starting by dialoguing with countries to understand what it is that they're asking for. So my organization is working intensively to connect global financing and technology to country priorities developed through their NDCs. Through our work with the investment working group of the Insurance Development Forum that we co-chair with BlackRock, we are helping to define the criteria needed for resilient infrastructure investments, potentially opening up a sub-asset class to offer a differentiated, diversified, and anchor-related opportunity set for institutional investors that would want to channel money to NDCs. Allow me to close by emphasizing two final points. First, NDCs are not merely about climate action. They are fundamentally about sustainable development. Development aid and domestic resources will be in the long term ineffective if we ignore the growing threat of global warming. But the opposite, and that's my last point, is true. If we get it right, we will preserve the planet and poverty will become history. Not a small order, but the only right thing to do. Thank you very much for your attention.
Thank you very much to Magny for setting up such a powerful start to the subject on innovations in NDC Finance. I'd like to welcome now Jens Nielsen, the CEO of World Climate Limited, and his panel to discuss the issue in more detail.
Hello, can you hear me? Good. Welcome, distinguished panelists, to this session on innovations in NDC Finance. Just to give everyone a brief introduction, over the past 2 years, we've seen a number of new initiatives that are aimed at structuring the flow of finance to projects to implement the Paris Agreement. Among these initiatives, we have the NDC Partnership, represented here by Pablo, backed by the German government and other partners. We have the NDC Invest, and this is a tough one, the NDC Pipeline Accelerator Multi-Donor Trust Fund. Amal, I'm sure you will explain more about that later. From the Inter-American Development Bank, the Climate Finance Accelerator, initiated by NDCI and supported by Ricardo, Energy and Environment. And also lately, the Climate Investment Platform that we work with ECLAY in our 20, and of course also UNDP. So this session will draw on insights from these initiatives. We will hear more about them, and on defining the necessary ecosystem for NDC implementation, best practice in between public and private finance, and so forth. Let me first start with you, Emelia Holdaway. Can you briefly describe What is the essence of your initiative? What are the goals and which problems are you trying to attack?
All right. You can hear me all right? The Climate Finance Accelerator is a very specific intervention. We held the first one in London in September 2017. And the core of the Climate Finance Accelerator, we brought 4 countries to London, each paired with an investment bank. And over an intensive working week, those countries developed financing propositions, working with the commercial banks for their priority NDC projects. There was quite a bit of work that went into preparing the countries for the week, but in a nutshell, that would be the Climate Finance Accelerator.
Okay, thank you. Pablo, could you give a few words on the NDC Partnership? What is it in a nutshell?
Thank you very much. Yes, the NDC Partnership is a global initiative with countries and institutions coming together to facilitate the support and implementation of NDCs. We work in providing or facilitating support in terms of technical assistance, capacity building, access to knowledge and information, and facilitate access to finance. We currently have 64 countries that are members and 13 institutions, mainly institutions that are multilateral development banks and intergovernmental agencies. And we recently opened a new category, which is the associate membership, where we have room for non-state actors in general, so private sector, academia, civil society, and others who want to join the force in terms of supporting countries in developing their NDCs.
Thank you. Amal,
Hi.
could you please explain about your initiatives?
Sure. I'm a bit. Is that better? Is that working? Can you hear me? Yep. Okay, great. So thank you very much, and I have to say we're involved in both of these 2 initiatives, so which is great because we do need obviously as much support to really help bring forward the implementation of NDCs. And so we at the IADB Group, which is both the public sector and our sister private sector arm, we have created what we call the NDC Invest Platform, which aims to provide a one-stop shop for accessing resources that are available across our organization. And there are 4 main components. There's what we call the programmer, that's providing technical cooperation to help build and strengthen institutional capacity and arrangements and start to program possible investments. We have then what we call the pipeline accelerator, which I can talk about a bit later, perhaps, in detail, but that's to bring forward pipelines of projects. And then we have the market booster, that's to strengthen domestic markets in country to help, particularly for SME financing and new business models that are going to be important for the low carbon and resilient economy. And then the mobilizer, what we call the finance mobilizer, where we work with our governments and the private sector to access concessional resource to help really mobilize scaled up investment. And I'll come back to that because we had yesterday a commitment, a new announcement from the UK government that will specifically help support that aspect of our platform.
Thank you, Mark. Then to you, Joe Scheuer, Director of Climate Change and Disaster Risk Reduction at the UNDP. From a development angle, how do you see the challenge in terms of NDC finance, and how do we need to innovate to solve the challenges that we have?
Well, first of all, thank you for the invitation. Great to be here. Now, this question seems to be a much bigger one that I can impossibly answer as briefly as my predecessors.
No, but that's the intention, Joe.
That's the intention, okay.
Yeah.
But let me actually be very, very brief, and then we can perhaps discuss more in depth. As you know, UNDP has been for over 20 years working in about 140 countries on climate action, very much on the ground, hand in hand with government. And one particular challenge we see, or let me actually mention two at this point, is number one, to use the NDCs as a driver to do development differently, very much within the national development agenda, embed these objectives in that national development agenda, and make sure that they are financed. And where we see a gap, if you wish, is that while we're being told that there's plenty of capital available in the world to invest, for instance, in renewable energy, We don't see that yet translated at scale necessary at the country level. And there's two reasons for that. One, the risk environment is not necessarily conducive to these investments to happen, but also we haven't connected well enough the multitude of global or regional initiatives to actually what happens at the country level to really go to scale. So I'm not saying nothing is happening. What we're saying is that the connection to the country level and the partners there is not at the scale necessary to really meet the climate opportunities.
Okay, thank you, Joe. If you then go through the panelists again and try and get your answers to the challenges that Joe just outlined, do you have any experience yet from your initiative in terms of what needs to be done? Can we scale the finance, etc.?
Yeah, no, indeed. Well, the Climate Finance Accelerator was a fast-track transaction-orientated process. And I think by focusing, quite narrowly down on getting projects from a NDC policy into a project pipeline, we paired each country working with an investment bank. So we had Mexico with HSBC, we had Deutsche Bank working with Nigeria, we had BNP Paribas working with Colombia. We really did have that focus on developing bankable financing propositions for their individual projects. And I think by having quite a specific focus on that aspect of the challenge, I think that's where the Climate Finance Accelerator adds value, and it's certainly something that can be replicated, it can be scaled. I can say more about that at the right moment.
Yeah. And Pablo, from a broader NDC partnership perspective, do you have any input
Yes.
to? Yeah.
Well, Joe basically describes what the NDC Partnership does. And of course, they're members also. So what we do is we follow the spirit of the NDCs, which were homegrown. Were determined by the countries. And the implementation of the NDCs has to be done with support based on what the countries are asking for, what the realities are, what they need. And that's what we do. So we come together under a single framework of operation with all our partners to discuss with countries what do you need, what needs to be done, and then we bring the whole support. We avoid duplication of efforts. We try to bring the knowledge from the global level so that we can replicate best practices, and but always focusing on what it is that the country is asking for. And going to Joe's point also, the first part of his point is, the thing that we most hear currently when we go to countries is, when we talk to institutional partners is, there's quite a lot of money. We're not seeing bankable projects. When we talk to the countries, they say, we know what we want to do, but we're not getting the money. So by working with both our institutional partners and the countries, we're generating capacity at the country level to put together these bankable projects, and working with our institutional partners that are delivering incredible new tools like the ones that Amal-Lee is going to talk about to facilitate access to NDC implementation.
Yeah. Just for the audience, could you briefly describe who are members of who are the organizations behind the NDC partnership, and how many countries are involved?
So we have 64 countries from all around the world, both developed and developing. And we have 13 institutional partners. We have World Bank, Inter-American Development Bank, African Development Bank, Asian Development Bank, European Reconstruction and Development Bank, Caribbean Development Bank, plus UN organizations, UNDP, UN Environment, FAO, UNFCCC, OECS, and so we have a broad range. So we're bringing together both the side of the financial institutions, the UN organizations, and other intergovernmental organizations working with the countries.
Thank you. Amal?
Thank you. So yes, this is exactly what we're focusing on. We have to recognize that our countries have different needs, as I think Pablo has emphasized. They're at different stages of maturity, if you like, in terms of NDC implementation. And so the idea of our kind of approach is that we engage with the country to determine what do they really need to help bring forward and mobilize particularly private investment for their NDCs. The Pipeline Accelerator, a new instrument, we're partnering with the Nordic Development Fund. And the idea there is to look at bringing forward bankable projects, ensuring and using the resources under the accelerator to ensure that the climate-related elements and other sustainability elements are fully embedded into the project design and preparation, and all the feasibility studies, etc., can be covered with this additional resource, because that may not be available, or it may be seen as, you know, adding too much cost to the client. But also ensuring that we look at any possible upstream issues that need to be addressed in the policy regulatory framework, particularly when looking at infrastructure, the public-private partnership, PPP guidelines, procurement guidelines, to try to embed the climate and other sustainability-related elements further upstream, believing then that if we do that and provide all of that additional support, these projects should accelerate through the pipeline. I think there's a theme here of acceleration, which I think, as we all recognize the urgency of really moving forward if we are to stay well below 2 degrees. So acceleration is, I think, clearly a theme coming out.
Okay, thank you. And to you, Joe, if we then turn the discussion to what is needed in terms of, because we need both public finance and private finance to solve the full equation. When we look at the public finance and what the public finance can do, what is the view of UNDP? I know you worked a lot on risk reduction, etc.
Yeah, thank you. So I think you're absolutely right. And when you take part in these discussions globally, you sometimes get the impression that there's plenty of money, we just need more projects, and that's the end of it. Everything is fine. That's of course not the case. I mentioned earlier very briefly the challenges. One is to actually create an environment to make the private sector come in and go to scale and transforming the energy systems, for instance. And that often takes many years of engagement, and that can only be funded by the public sector. And obvious things when you talk about investment themselves is de-risking measures in terms of, for instance, making sure that there's a renewable energy law, that there's a feed-in tariff that makes it attractive and is legally sound, etc., etc. Into then also financial de-risking instruments. And there's, of course, where UNDP then is less engaged. While we do financial de-risking, we actually don't handle financial instruments. We purely a grant-based organization and invest for public money. But there's also the broader context that you can't forget. Sometimes you can't get this work done because of political economy issues. Utilities don't necessarily want to transform themselves into a business model that doesn't depend on fossil fuels. And so you need a sustained country-level engagement that needs to create that broader capacity environment and openness, and also the political will to make that transformation happen. And this is where the public sector remains extremely important, and where actors such as UNDP, but also others that are embedded at the country level, can actually sustain that multi-year engagement to get there. The trick, of course, is to do it in as many countries as possible, as fast as possible, because as was just said, time is not on our side.
Okay, thank you. Do you have any comments to the public finance side of things, the equation?
Yeah, no, indeed. I mean, it's a platitude about getting the right mix of people in a room, but when you do get the right mix of people, it really isn't a platitude anymore. And I think, to an extent, we could argue that within many countries, they already have the players in the value chain, there in the country to finance NDC implementation. So what we really focused on with the Climate Finance Accelerator was to do that convening and bringing people into the same room. For the countries we worked with, it was it was governments first engagement with the private sector. So for the country delegations that came to the Climate Finance Accelerator in London, we had a mixture of national and international development banks. We had both finance and environment ministries, aid agencies, and as appropriate, line ministries responsible for sectoral action and at the subnational level. And in the preparation leading up to the CFA in London, there was in-country engagement with another set of stakeholders, local capital market players, project developers. And I think when we're talking about engaging the private sector and building public sector capacity, that conversation is the sort of is one of the first steps, but things can really start to move when you have that happen. The other thing I'd say about the Climate Finance Accelerator is that we went really quickly, from theory onto practice. So it'd be one thing, to do a training on, say, like project, commercial risk assessment or financial instruments. It's a completely other thing to have a country with their list of NDC projects they really want to get financed and getting real-time reactions from a commercial investment bank. That's a real crash course, if you like, in what a bankable project looks like, but in a safe environment so that the public sector can have those first conversations, get some feedback about what they would need to do to make these projects bankable. And I think coming out of the CFA, there's the sort of hard output. They've got initial financing propositions they can now go back to their local markets with. But I think more capacity and more confidence to engage with the private sector. And that's, very much thanks to the, the commercial banks that gave their time.
Pablo?
Thank you. Yes. One of the big things that we are working on is on the enabling conditions, and I think that's fundamental. And the partnership comes together, including, of course, the host government. So they need to understand that as part of their responsibility, they need to bring together this enabling conditions, because if not, the rest is not going to work. But of course, a lot of technical assistance is required for that, and we're providing that kind of technical assistance. What we're seeing is, in many cases, there's very limited capacity in terms to understand where the money is going to come from or could come from. There's a lot of innovative ways of bringing together public, private, international money to facilitate the implementation of NDCs. But in many countries, they're just thinking about GCF is my only way out, or they're thinking about no grants, but they're not understanding that this is a long-term commitment. And that means that national budgets need to come in, private sector needs to be involved, and this has to be facilitated through a framework, policy and legal framework that will allow it.
Okay. Amal?
Thank you. Yes, so fully agree, and I think, as Joe said, that, and Pablo just reiterated, the importance of getting the enabling environment is essential, absolutely key to really ensure ongoing investments over time. However, that does take time. It is challenging. Some sectors can be more challenging than others, but we have to focus on all sectors. And of course, the political economy of that country is also key to which sectors may be easier or not. And so we, I think, fully agree. We have again office in every country in our region that we work in, and have that ongoing and very trusted relationship with our governments, and that's, I think, absolutely essential. But in the absence of having the enabling environment, we can't wait till we get there. It's really important, I think, as Pablo just emphasized, and Emelia too, that we have to bring forward private sector investments, and in particular use other instruments, particularly financial instruments, sort of innovative financial instruments or financial engineering, if you like, to really help mobilize private sector investment, including domestic capital from domestic capital markets where that exists. And do that as, in a way that demonstrates, brings good learning, demonstrable progress, ensures you can demonstrate a track record around the new technologies or new business models that the low carbon resilient economy entails. And so we're very happy, as Pablo said, of course, the Green Climate Fund is there. It's the biggest source of concessional funding available. But we were very happy that yesterday the UK government announced a new trust fund at our bank, at the IADB group, for around, I was just doing a translation from pounds to dollars, who knows, could change. My personal feeling is if they pull out of Brexit, we'll get a lot more from their British pounds, but we're thinking now around $230 million to work in 4 countries, and to work in countries that the UK has already a very strong partnership as regards to climate change, representing probably over 10 years maybe of engagement on this agenda, which is Colombia, Brazil, Peru, and Mexico. And so, and we're very happy that new trust fund that we're managing on behalf of the UK government, has concessional resource to help mobilise private capital. The UK has, having learnt through experience from different funds that they've been involved in, whether it's Clean Technology Fund, the Green Climate Fund, they recognise the need to be able to do the riskier types of investments. So, maybe, do investments that, may have never been done before and use that resource in a risky position. So that's, really, really welcome, because too often we see concessional resources available, but then when we go to access it, it's like, oh, well, you really can't put it in a risky position, and, which was, one of the initial intentions of concessional funding from the climate finance perspective was, has always been to do the really more innovative types of investments. So we have that resource available. But they have also put forward up to maybe 10 or 15% of that resource will also be available in the form of grant funding to do the enabling environment conditions to help strengthen, where those don't already exist, and also to provide what we refer to as investment grants to help also bring forward new types of technologies, new businesses. So it very much reinforces and supports our NDC Invest Platform objectives, and we're very excited because it gives us, a really great opportunity to move forward in 4 countries where there clearly is a very strong leadership on the climate agenda to actually hopefully benefit the region as a whole as the learning and the technologies advance, etc. So that for us is absolutely a key objective moving forward.
Good. Joe, the Paris Agreement, I think it's a 29-page global agreement, so of course it's very general. UNDP, you are out there in almost every, or you're out there in almost every emerging developing country. You yourself, you have worked in Cambodia, in India, etc. Is this something that has to be solved locally, also engaging both reducing risk and engaging the private sector, or is it something you can scale? What is your view on that? Is it a decentralized issue, a central issue?
Well, I think it's a bit of both, but I believe what's missing today, certainly when you look at the Paris Agreement from the mitigation side, and in particular from the energy side, I think the local piece is a bit missing. Of course, some countries that are doing really well, the policies are in place, they mobilize their own investments, and in that case, you just get out of the way of the private sector and government and they do their thing. And where the conditions are right, you don't even need to package any kind of financial instruments anymore because it makes pure business sense. But there's plenty of countries where you don't have that environment, where you do not have the regulatory framework, where you have concerns whether 20 years down the line your investment that you make up front still has the return that you expected, and where also the private sector might not be looking at. Without mentioning a name now, where we, for instance, working very closely under the Insurance Development Forum, which is something we are co-chairing with the World Bank. It's an industry-led initiative. We're working on the investment side, and some of those biggest investors worldwide that actually are looking at opportunities, they then say, yeah, we're ready to, I think the countries were Singapore, Hungary, and Singapore, Argentina, and the Balkans. That's great. They need investments, but that's not where we as UNDP primarily looking to help create the conditions. We're looking, for instance, at all of sub-Saharan Africa, where energy also is an issue of driving economic growth and actually fighting poverty and really, making sure we achieve the global development goals. And what is missing is the right dialogue, and I think it's come out in what the colleagues have said also. This is exactly the reason why we joined, and we're happy to join and to be invited, the NDC Partnership, is to really anchor it at the country level. One last example, we still know some countries that have done their NDCs, and talking about the Paris Agreement, they're not yet where they need to be. It's great to have it. We see the Paris Agreement really getting much more momentum. I think that's a good feeling. But we don't have the right ambition in there. And in some countries, the NDCs is something that's being discussed still in the Environment Ministry and proposes objectives that the Finance and the Planning Ministry have already long surpassed in their own investment views. So you don't even have necessarily that cross-government understanding of how they want to take this agenda forward. And that cannot be solved globally. And I think globally we have plenty of instruments now, perhaps not enough funding overall available in terms of that discussion from the public sector, but we need to, country by country, get them ready, do this local engagement so that regional and global players can come in either directly through partners like the IADB or others and get it done.
Thank you. Emelia, you've worked 20 years with environment, and you also have been engaged in a number of developments of the INDCs primarily, correct? And what I understand is your initiative is kind of a deep dive into a select number of countries, right? What is your reason for doing that approach?
Okay, so for those who aren't aware, I work for a consultancy called Ricardo Energy and Environment. We supported nearly 20 countries to prepare their INDCs in the lead up to COP, and then since then we've been supporting countries on implementing their NDCs, so climate investment plans, NDC implementation roadmaps, sector action plans, MRV systems for tracking NDC implementation, and you know, our view is that there's sort of a couple of things that are needed at the same time. So leading up to the signing of the Paris Agreement, that lead up to COP21, a huge amount of political capital and momentum was generated in countries, and even countries that may have had an ambitious domestic climate policy platform. You know, they've now committed to that on the international stage, and that gives a certain lever, you know, when you go back home and you're looking at implementation. But to sort of really make the use of that lever, I think there are a couple of things that countries are needing, and I think the sort of enabling environment, technical assistance support that Amal-Lee was alluding to, you know, getting their stakeholders back together, particularly at the sector level, and going, okay guys, we've signed up to this in our NDC. We have to make this happen, and you know, a lot of the stakeholders that we worked with, you know, in individual countries to develop their INDCs were very motivated and excited by the process. You know, they're all like, okay, you know, okay, Emelia, you know, what's happening now? So I think that support for countries to be able to convene their stakeholders, make the most of that political momentum, you know, get their NDC implementation roadmap, a sectoral action plan agreed with the sectors, you know, governance systems for driving NDC implementation, ideally enshrined in legislation where possible so the next government can't undo that. That's really important, and that needs to happen. But at the second, you know, at the you know, second point is that, you know, the second round of NDCs are around the corner, you know, 2020, you know, for some countries, and watching countries go through that process of making their first NDC, and the political economy and the confidence of the numbers that they put in, I really do think that countries are going to need to have a sense of racking up some success before 2020. So this means, like, let's get the enabling environment right, let's, you know, do the homework, get good implementation plans, let's get the ball rolling on, you know, a sector action plan, a sector pipeline of projects. But in the meantime, with the Climate Finance Accelerator, you know, there are projects that countries have got where they've already got, you know, strong political buy-in. People want these projects to happen, and they make sense from a climate perspective, from a development perspective, from an economic development perspective. So, you know, we would say, okay, great, let's grab those, let's package them together at scale, let's develop financing propositions, let's go now take them to market, to the private sector, but also to your bilateral partners, the development banks, because, you know, we think that it's possible for us, you know, in the private sector to move in a nimble way, and I think to really help countries to get those runs on the board so they can inject energy back into their domestic processes, and, you know, looking at the clock with one hand, looking at the temperature gauge outside on the other, when it comes to second NDCs, countries will be like, yeah, we can do this. Look at what we've already achieved. We're going to go for it with ambition. We can hope, right?
Sure. Amal-Lee, if I switch to you, can you accelerate the deal flow for the NDCs, just to?
Well, so our pipeline accelerator aims to do that, because sometimes, and it depends, you know, whether it's on the public sector side of our organisation or on the private sector, you know, we work in different ways. On the public sector side, we work with governments, from concept right through to construction and operation, and we're involved throughout the process. So bringing resources to ensure that we help embed the projects into the country's NDC agenda, but also vice versa, embed the other sustainability and other objectives of the government into the projects, in particular wider SDGs, is also going to be really important. Let me just sort of maybe backtrack and say a little bit what we're doing on sustainable infrastructure, because so as a regional development bank, around about 60 to 70% of what we do is infrastructure. So we have increasingly over the last few years, but it's really taken off over the last 2 years since Paris, I've been focusing on sustainable infrastructure as a way of bringing together what we do, but also in terms of bringing together the Paris Agreement, because we know the decisions that countries make now around infrastructure will determine the extent to which they're going to deliver on the Paris Agreement for staying well below 2 degrees, but also the SDGs, because when you look at all those SDGs, actually most of them will require some form of sustainable infrastructure to really help deliver. And certainly in our region, we have an investment gap for infrastructure, and to a certain extent have lagged behind other regions, for example, Asia, in terms of investment in infrastructure. So we're really focused on ensuring that we can work with our governments to both ensure that the enabling environment prioritizes the sustainability aspects of infrastructure. And one key issue that's becoming, I think, increasingly important is the extent to which countries are demonstrating that they have aligned their Paris NDC commitments with their broader economic and infrastructure and growth agendas. We're seeing particularly investors, we did a joint report with Mercer to ask investors, how could we reduce risk to them so they would start to come into sustainable infrastructure? And one issue that emerged that was, I was initially surprised, but actually when you look at the work of the Financial Stability Board Task Force on Climate Risk and Disclosure, probably less surprised, because I think they're becoming very aware over this issue of climate risk. They said, well, if a government's got an NDC, but then it's bringing forward a piece of infrastructure that isn't clearly aligned with that NDC, or they haven't demonstrated it's consistent with that, well, then this issue of policy transition risk could become very real, and that asset could become stranded in 30 years' time. And so these sorts of things are starting to come up. And I think it really reinforces the importance for governments in particular to really focus on getting that alignment of the policy and the policy agenda as related to the SDGs, the Paris Agreement, but then also their broader growth agenda. And so at the event that Pablo hosted, the NDC Partnership hosted on Sunday, we heard from a number of people, Cristiana Figueres and also Lawrence Tubiana, about the importance of 2050 pathways, decarbonisation pathways. We're now working with many countries in our region, well, several countries, but we're seeing the demand increasing to help develop that in-country capacity around these types of long-term 2050 agendas, because that will then enable countries themselves to understand what decisions to make now that are consistent with their longer-term objectives.
Pablo, could you give tell us a few words about what is the core mechanism behind the NDC partnership, and how do you see it being successful?
Well, the first and more important thing, as I was saying at the beginning, is this is country-driven. So we start the process with a request from a country. So not even all our member countries have requested support, but we're seeing that growing very quickly. Once we have a request, what we do is we start a conversation in terms of where do you stand in terms of your NDC, as Amal-Lee was saying, it's very different from country to country. There are countries that start by saying, I don't think my NDC works. No, I have to look at it and see if this is something for me, and maybe review it. Others that say, like, I'm already at the stage of investments and I have projects ready. Depending on that, what we do is we create, after a short assessment and bringing together all the members that have interest in that country, that have experience in that country, that are members, we put together what we call a partnership plan. That partnership plan identifies the specific actions, the priorities by the country, the stakeholders with their roles and responsibilities, the specific needs and who's going to take care of them, and even the gaps in support, so that we can go back to the partnership and say, is there anyone else interested in joining us in supporting this country in doing what the country wants to do? And this could be process-driven, and this is what we're seeing at the beginning. So countries are at this point trying to get the Ministry of Finance or Planning involved, and we're asking for 2 focal points from each country, so that we can have that. So Ministry of Environment or whomever is in charge of climate, but also the finance and environment, so that we can give it this comprehensive view. This is about the development pathway, about bringing together SDGs and NDCs, and not about climate and environment just. Other things are governance structures, decision-making around NDCs and how to move forward. Other issues are increased ambition. Already we're seeing countries like Fiji that are enhancing their NDC. Others that are related with starting the process in terms of finance. So from the beginning, costs, all the way to bankable projects and strategies to be able to do it. So we try to be as versatile and flexible as possible, and of course we ask that from our members, which is sometimes very hard and requires them to move a little outside their usual business way of doing things, but that's the only way to reply to the multiple requests by countries that are very, very different.
Thank you. I'd like to move on to attracting private finance. In the country where I'm from, Denmark, we have created the Climate Investment Fund, for example, which is using some of the models that the Danish government has tested in Northern Europe and other places in combining public finance as de-risking with pension fund capital mainly. And it's the same model for the Climate Investment Platform, where you use public finance to de-risk. Joe, do you think, I know you've worked a lot, the UNDP worked a lot on de-risking. Do you think that that's an approach that can be used and it's possible to implement in a more general way in developing countries?
Yeah, certainly. Still working?
Yes.
Yeah, okay, sorry. Yeah, no, certainly. When some of the things we've done in UNDP in the past, Uruguay or South Africa come to mind, is where we, for instance, to an initial investment, a few $1 million, pilot wind farms, a policy element to it, working with government on the feasibility, look at the regulatory environment, work on the legal or other kind of issues, and that has been the genesis of what is currently the state of the wind farms and wind power in both countries, and it's been a great success story. And I'm sure other partners have similar examples. What is not working in our view, and why we have also been working on this idea of the Climate Investment Platform or Climate Investment Corp, and why we're looking what happens globally, and again, why we have joined the NDC Partnership, is we don't see enough of that happening in the right partnership at the country level. And so as UNDP, while we've worked more traditionally to the public sector and to these instruments, we're asking ourselves, what can we do, working so closely with government for so many years, to facilitate other actors to come in, again, at scale? Because, as I said earlier, time is not on our side. And this blending of the approach of, I'm not sure whether blending is the right word, because I'm talking about necessarily blending financial instruments, but this dual approach of the public sector investing in that kind of environment, and much more earlier bring the private sector to those countries that are currently overlooked, and more deliberately work on political economy issues that prevent us. That does take two things, or several things. It takes a different behavior and a different kind of partnership of those of us that work at the country level. And again, this is what's so great with the NDC partnership that was initiated by Germany, because it's partners that invest in that behaving and working differently. Working side by side doesn't get us there, so we need to really build those synergies. And hopefully, secondly, advocate, and I said this earlier, but I need to really repeat it, there's a bit of this tendency, well, the private sector will take care of it, and we just need to find the financial instruments and invest in the project pipeline. And we could give you so many examples where this is not welcome politically. Just to end with one very recent one, post-hurricane Irma and Maria in the Caribbean, we've been now engaged as the UN very significantly in Dominica. And there's a very interesting debate that solar actually shouldn't be part of the solution. Let's just work the next few years with diesel generators until we have geothermal power on and have figured out how we're going to transform our grid. And I'm not saying that's the position of the government or what's going to prevail, but that's the discussion that's partly taking place. And so we need to have that broader public engagement to actually really set the path to transform these energy systems. And we're not investing enough in that public side of it.
Yeah. So just to add on to your words about the Climate Investment Platform Investment Cup, that's something we have discussed for some time with our 20, Clay, BlackRock, Philips, Siemens, others, if it would be possible to create a kind of a platform, a deal flow platform where you could accelerate projects. Ideally, maybe next year in Katowice, could you focus an event like this not so much on talking about it, but actually pitching projects, pitching technologies. So maybe I'd like to get your views. How far are we from that? With that, do you see that as an option, or what is your take on that?
I think it's really interesting, and I think we need to try different types of solutions. So I think it's something to certainly look at. I guess we'd need to think about the format for that and who would be doing the pitching. So, for example, I've worked with commercial banks previously, making a Dragon's Den and people pitching different types of climate or green technologies, and a panel of investors reacting to that. And it's a pretty tough environment, potentially. And I suppose what we're talking here is about trying to bring together the public and private sector discussion, right?
Capital, yeah.
Exactly. So I think it's something, in a way that sounds a little bit like the output of the Climate Finance Accelerator. So we had the several months of working with countries to help them identify the sectors they want to focus on, the projects they wanted to bring to London for the CFA, and then we had that intensive week in London where they developed the financing propositions for their priority projects. On the very last day, we had what we called a Meet the Market session, and it was maybe a little bit like what you're talking about, as in the countries then presented back to the London financial community the financing propositions they developed over the week. I think sort of, my sort of having gone through that process, I think we'd want to have some capacity building or support with those countries leading up to that investment COP. So, for example, in the Climate Finance Accelerator, we spent the entire afternoon on the Thursday before that Meet the Market session, where we worked with the countries on their pitches. They gave them, we gave feedback, we, coaching them through, what the words an investor wants to hear. And I think lots of pennies came out of that, pennies were dropped, if that translates well, that expression. And I think, it was about not just having the financials right for the project, which we'd worked on over the week with the countries, but what they found out too is that investors were just as interested in the story behind the project. And they really liked hearing that, a project aligned with the NDC, aligns with national government policy commitments, and that, something that a lot of those public sector project developers have is they really understand the technologies they want to work with and that connection to the demand for the project. So I think why not try it? And, why don't we do that capacity building and that coaching with the countries so that, they're not coming to it with good ideas that get shot down. Like, we really want every idea to succeed, don't we?
So it needs to be well prepared, but you believe in the idea.
Yeah.
That's basically what you try to do in London.
Yeah, pretty much, yeah.
Pablo, private sector facility, how far are you from that, and how important do you see that?
I think that there's 2 points I want to make in this. The first is that the framework that we're developing, our partnership plan that we have for each country, that country leads, is an important vehicle for this. Because it has the country buy-in, it has been approved by the country, it identifies the priority actions, so it should become the go-to place for investors, including private sector. On the other hand, what we're seeing is a push for regional initiatives in this sense. So regional investment forums, for example. And we see a good example already happening in the Pacific Islands, where over $1.2 billion were raised for energy, which is very significant. And the Caribbean is now proposing something like that. So let's bring together the projects from the countries, and that allows them to generate, for example, economy of scale. So alone, they might not be able to bring the private sector, but if they come together, that could increase the possibilities of bringing the private sector and be able to reduce the risk associated. So I think that we have the entry point at the country level with the exact requests, actions that where investment needs to come in, and we can bring them together regionally or even globally with something that's a lot more concrete.
Yeah. Amal-Lee.
Yeah, so I think, just staying on this theme of the importance of this dialogue at the country level, it's really important that governments engage directly with their private sector, not just about the projects, but also that the private sector can feed back to governments how the policy framework, the regulatory framework, can potentially be improved to better mobilize them. We're now engaging. We had a really interesting dialogue in Brazil as the first country where we brought together the Brazil government, the central bank, the finance supervisory body, and some investors, as well as partnering with BNDES and PRI, the Principle for Responsible Investors. And actually that was a really interesting conversation where a number of issues were highlighted as being barriers to investors going into, particularly into sustainable infrastructure. And the reason we focus on sustainable infrastructure in that context is that's where we really see the challenge of billions to trillions really being. And so having identified those barriers, now the policymakers can actually go away and improve some of the policy and regulatory issues that will be needed to better leverage in those investors. So that's as important as bringing, strengthening the capacity of governments around projects and what kind of projects are needed. So, but we really, the challenge we face with transitioning to a low carbon and resilient economy and the Paris objective, staying well below 2 degrees means we have absolutely no time to waste. The capacity has to be built on all fronts and as fast as possible. Really, yesterday all this should have happened. So that in-country dialogue is really, really essential. And of course, these international initiatives and, and the initiative actually that Emelia brought representatives from Colombia and Mexico, we were involved in those discussions. It was really interesting because that was a very deep capacity building exercise for them in quite an intense short period of time. It was, I think a huge amount of information was learned. But of course now what we want to do is go, offer continued ongoing support to ensure that that conversation continues in country.
And to you, Joe, what does success look like in terms of an investment platform or private sector facility from the UNDP's perspective?
That the little time we have is being used so that at the end of it, the money was mobilized and spent so that we stay at 1.5. That sounds perhaps a little bit crazy, but more concretely, it simply needs to, I think, in a very simple way, it needs to bring the public and the private sector at the end of the day together so that at the country level, we create the vision, the conditions, the plan, the projects, and bring the money to make the transformation happening, as soon as possible. And again, that success is, I think, criteria obviously has the money been mobilized is a very easy one, I suppose, to measure, but also has the NDC lived up to the ambition in the next round that we need to be, and have we created the partnerships that allowed us to do it? Because the way we used to do business is all of us together is simply not going to get us there. So from those two things, the partnership, the conditions, and the money mobilized.
Yeah, I'll get back to those success criteria in a second. Just wanted to ask if there's any questions from the floor. Yeah, there are a few. The gentleman on the third row. Do we have a mic?
Thank you. Yogan Anton. I run a company which does technology transfer. Generally, when there are infrastructure projects, there are problems of corruption. You know, we only need to read the newspapers to know this is all over the world. And I'm wondering whether we are going to have this problem. Do you have this problem? Have you encountered this problem? One of the questions which came to my mind was, you said there are 65 countries who have asked for your help, Mr. Pablo Viera. Could it be that these 65 countries are the countries in which the governance is relatively honest and the others have not asked for your help? It's a possibility. And more importantly, I'm wondering what you can do or we can do to make sure that this problem doesn't become as important as it normally is on infrastructure projects, in climate-related projects. And I think I had one clue when Mr. Scheuer, you were talking about the public participation. There have been cases when an audit performed by citizens groups has brought to light things which are not normal, which are not just, if you like. I think we need to make sure that there is more citizens' participation in these projects. It is not a question of the UNDP relating only to the government and the administration, because that is where the money is siphoned off. Thank you.
Pablo?
You take other question?
Well, thank you. Yeah, no, basically, I think that the point is that what we're looking for is that whatever investment is made, we guarantee that it keeps in mind the long-term views of the Paris Agreement, even beyond the current NDCs, because we want to avoid lock-ins in terms of where those investments are going in infrastructure, in energy. So you did need complete buy-in by the country and commitment. And that's one of the things that we are looking for. And most likely the 65 countries we have is because they're the most advanced in terms of understanding and knowing that this is necessary. So what we're doing is, if the country has the drive, has the interest, then we can support them. If they don't, then we can't.
Okay. Rod?
Yes, I wanted to ask the panel if they had heard the suggestion this morning at 11. I don't know if you were here for a new financial innovation that Jigar Shah thinks could increase solar deployments by about 200 to 300%. This is a new idea that came out of a working group at Columbia called the tax-exempt clean asset bond. It's where tax exemption is conferred on green bonds based on the public benefit conferred by the assets, which reduce waste, pollution, GHGs. They can be used for all kinds of public purposes to clean up the environment. For instance, they might be used to deploy zero-emission energy projects or factories for electric vehicles or equipment that reduces emissions from oil and gas facilities and things like that. But the idea is that you could really rapidly accelerate deployment because you would democratize participation in financing. Instead of having a situation as we have in the United States now where the tax credits that we use restrict participation to very, very large players. This would be an instrument which every single baby boomer would want in their portfolio because it would be a higher tax-exempt return than anything else they could get. There's been a proposal made by members of the working group that designed this, that this could possibly be used in an international context for an international tax-exempt green bond, where you would have an international agreement that would allow a private developer in, say, someplace like Kenya to issue these bonds in New York or London or Tokyo, and they would be bought by investors in those countries where they would receive tax exemption in those countries. So you could leverage the tax system in the northern countries to help finance development in developing countries. And I'm wondering, what you think and whether you might be interested in helping to develop this kind of a concept further. It's a very rough concept at this point, and we're looking for partners who might help us flesh it out.
Thanks, Rod. Amal-Lee, maybe you have a comment to this?
Yeah, no, I mean, it sounds very interesting. And of course, we need to think about, all types of innovative ways of raising capital and, channeling it into where it needs to be. But it doesn't get away from the fact we do need to develop the assets that can really benefit from such capital. I mean, a lot of our discussions at the moment show that if we can bring forward, if we can create and strengthen the upstream enabling environment, ensure that signals and certainty and transparency, particularly around sustainable infrastructure, are created at that level, and we have well-designed projects that can, well-designed, well-constructed, well-operated, then the capital should come. But of course, we need to focus on all of that. So I think bringing forward the capital through such a measure could be very interesting, and would certainly be interested to know more about the initiative, and potentially people on our private sector side might be interested to engage with you on that. But I think we also need to recognize that we have to continue to focus on the upstream and the project development phases as well.
Okay. We need to close this session soon, so I would like maybe to return to Joe's statement of success, to get the vision, the conditions, the projects, and the investments there, and then ask each panelist if this is possible to achieve, and what you think are the most necessary things in that equation.
There's a lot of money around, and we have all the technologies we need already to have a low carbon world. We don't need to wait for new innovation. I think our challenge is very much about connecting the two. It's about getting the political economy right, and it's about steering that momentum and the finance. I think that point about a tax-free, green bond asset. There's been, fossil fuel subsidies in many forms for a long time. R&D grants, tax exemptions. So I think it's about steering away from the vested interests of yesterday and today, and towards supporting our champions of tomorrow, and they're out there.
Yeah, thank you, Pablo.
Thank you. Well, I would insist on one of the pillars that Joe mentioned, which is partnership. So if we don't come together, and if we don't work together, and we don't find the synergies of all of us moving in the same direction, responding to the specific needs of countries, it will be impossible. And we need a lot of innovation in many different ways to be able to reach these goals.
So I think the challenges can be, and I think maybe it's particularly from an MDB perspective, summarized into these three main areas of working upstream on the policy, regulatory agenda, and institutional capacity, working at the project design, preparation, and construction, and then financial innovation to help accelerate and bring in capital at scale. And, and partnerships is essential at all of those 3 stages. So, sorry, it's not a single, but, as a package of priorities.
Joe?
Well, perhaps a small word of caution, which is that, when we speak about private sector investment, again, a lot of it is in the mitigation space, a lot of it is energy-related, transport, efficiency, and so on. Even if we get that right, what if we don't get the other things right, like agriculture, forestry, it's not going to work out. And we have a huge challenge in the adaptation picture itself, and we shouldn't forget that when we talk about private sector investment, there are quite interesting opportunities in the adaptation space as well that we should really look at. Having said that, yes, I think it's possible because some countries are already showing it, and they have gone on a path that's not just low carbon, but actually zero carbon. But it's not quite enough. And so what I would like to see really come out is that these emerging partnerships with the private sector globally to engage with the other international players in countries to advocate and show together what is possible across the board. And so, for instance, working much more deliberately with finance ministries to get them to understand what is really in there for them in a positive way. But yes, well, let me say it has to be possible.
Good, thank you. And with those
Thank you.
words, I think that we will finish this session. Thank you very much to the panelists. Thank you.